If you have ever traveled to a foreign country, you may have needed to exchange your money. If so, you have already participated in Forex trading. Forex is the short form of foreign exchange. Well, Forex is a bit more than that. For example, companies buy goods from other countries. In order to buy them, they need to obtain the local currency first, just like us when going on holiday. The difference is they will exchange huge amounts. When these companies exchange these huge amounts, they will actually move the price because the demand for the currency that they need increases. When the demand increases, the price increases. With all this exchanging going on around the world, the exchange rates constantly move. This is how it works. When currencies are exchanged, they have a certain price, the exchange rate. As in any market, the price of a currency is determined by the law of supply and demand. If there are many people or companies that want to change euros into dollars, the price of the dollar will rise against the euro, and so the exchange rate will change. Let's use an everyday example to explain how you can actually profit from this. Say you live in Europe and went on holiday to the United States. Let's say that you changed your 500 euros into US dollars at the rate of $1.4 for every euro. You got 700 US dollars, but you do not spend any money at all. So you still have $700 after you come back. After the exchange rate moved from 1.4 to 1.3, instead of getting just 500 euros back, you actually get 538.5 euros. You have gained 38.5 euros simply from holding your money in dollars while the exchange rate changed. This is essentially how we trade in the Forex market. We buy a certain amount of a currency, hold on to it whilst the exchange rate moves, then change it back, making money along the way. How to decide when the right time to buy and sell is exactly what we teach you throughout the rest of our learning lessons. As you can imagine, traveling a lot and saving a bit of money on your holiday budget and then exchanging it, it's not really a practical approach to trading currencies. Fortunately, there is an easier way to do this. You can trade currency through online exchange offices called brokers. What this means is that you can exchange currencies online throughout the day and take advantage of the constantly fluctuating exchange rates. Just as in the example of when you went on holiday, you can buy different currencies and make a profit as the exchange rates change. This is trading the Forex market. Trading Forex online with a broker has many benefits. You can trade Forex from your home or anywhere that you have an internet connection. The Forex market never sleeps. It is open 24 hours a day, 5 days a week, and so can suit your daily routine. You do not need a huge budget to get started. As little as $150 is enough to begin trading and building your account over time. Of course, it will require some learning until you get there, but this is exactly what Tradimo is here for. To help you learn how to trade in a way that can suit your individual lifestyle, and to help you navigate your way through the Forex market.
Alright, so that video kind of explains what we do. Um, I know there's a little bit more work to put into it, but with our support system that we have available to you, I want you guys to take advantage and use us. We're here to help. We give you trade ideas, we give you training to actually understand what it is or how to navigate this market, this huge market. And so I would tell you guys to definitely dive into our educators and our trainers. I just want to show you guys our support system that we help each other to collect pips in the market. And pips is basically just when the exchange rate changes, it changes by pips, right? And so this is our trading group, the Money Team International. We do trainings on a weekly basis. We also call trades for the team to help everyone win. You know, it ain't no fun when you up by yourself. It's good to have people with you uh, when you find the success. And that's what we do here on the money team. I know for myself, last week I called about 465 pips for the team. And then we have like 5 or 6 other traders in here that call trades all day. And once I do this next presentation, it'll kind of help you guys to understand um, what it is that you're looking at now. This might be foreign to some of you guys, but for the most part, when I go over this next section, it should be able to help you to take advantage of the trading group where you could apply it to your trading account. And even if it's just not the trades, if you want to learn, educators, trainers, we kind of break it down to help you be successful. And so um, I can just jump straight into the slideshow. I'm just going to go over entering trade. Just want to run through it right quick. This shouldn't take too long. If you guys have any questions, feel free to unmute, ask a question. We're here to help. At one point, I did not know this information, but 3 years later, I am happy that I can actually share this knowledge to help other people find some success in the market as well. All right. So entering a trade, you basically simultaneously buying and selling currency pairs, as you guys would have heard in the video. You exchange one currency for the other. Almost everyone has participated in this market, whether they know it or not. Whether you shop online, if you outside the US, you buy something from Amazon, like for me in the Bahamas, they charge me in Bahamian dollars. And so I am participating in the exchange, in the foreign exchange market just by purchasing online. So why not make some money from it? All right. So I have the Android as well as the Apple. The currency pairs. You look at this. This will be the euro versus the U.S. dollar, Great Britain pound versus the U.S. dollar versus the Swiss franc, U.S. dollar versus the Japanese yen, U.S. dollar, Canadian dollar, and you kind of can get a breakdown of it. We use 3 letters from each pair, each currency. We use 3 letters for each one of them. So the Australian dollar, AUD, that's the Australian dollar, USD, NZD, New Zealand dollar, Australian dollar, so on and so forth. The euro, the Japanese yen, so on and so forth. Kind of straightforward right there with the currency pairs. They do have some nicknames, but for right now, you just need the very basic information right now. So pips is a unit of measurement. As the market moves, it's moving by pips. It's moving by pips. Pips equal money. If you may hear people say that I caught 10 pips, I caught 50 pips, I caught 100 pips. Everyone else will go and trade at a different lot size, and the lot size will be determined on your account balance. I like to tell people don't risk no more than 3% in your account. So if you start off with $100, only risk $3 on any given trade. So if you take a loss, you still have $97 left in your account. All right. So you ain't feeling that small loss because now you still have the majority of your money in your account where you can make that $3 back later. Once you use proper risk management, you will find success in this market once you stick to proper risk management. So if you had anyone ever call a trade and they say sell, I mean they're expecting the market to go down. You hear buy, you're expecting the market to go up. So sell is down, buy is up. Sell is down, buy is up. You're gonna hear people talk about entry price. They're gonna ask you where's your entry price. That's basically where you got in the trade. When you hit buy or sell, the market is gonna give you the best available price if you do a market execution. And the entry price is basically where you got in the trade. So it's the entry price. Take profit, that means take your money and run. Take profit, stop loss, stop losing money. And the stop loss is very important. I know a lot of people that trade don't use the stop loss, but I'm a strong advocate for it. I'd rather take a small loss and make that money back later than to just leave the trade open. And a lot of stuff could happen. You could put your phone down for 5 minutes and the market can go completely against you. The stop loss will help protect your account. That way you won't lose too much of your capital. So when we look at selling versus buying, when you sell, you're expecting the market to go down. So for your take profit, you're going to subtract 10, and it's just what we start off with. We just tell people to subtract 10. As you develop your skill of learning how the market moves, then you can adjust your take profit to whatever you feel comfortable going, whether it be 10 pips, 15 pips, 25, 100 pips, 100% up to you. Or if you're following a trader, they might give you a take profit, and you would just copy and paste it into your trading app. So because the market going down is why we subtracted 10 when we sell, right? And the stop loss, if you're expecting the market to go down, you want to add 15 to 30 pips. You want to add it because you sold, you want the market to go down, but you want to put a stop loss to protect your account should the market go up against you. So in this example, and I use the Japanese pair, the JPY pair, that only has three numbers. Once you disregard this last number, if this is your entry price, so 80 is your entry price, and we subtracting 10 for our take profit, we automatically disregard the last number. 80 minus 10 is 70. So you would go ahead, modify your trade, and this would be your take profit. If we do a stop loss of 30 pips, a lot of people get confused because of this decimal point. 80 plus 30 is 110. So you want to add 110 to 780, all right, because it changed over the decimal. Don't let this confuse you. Your stop loss should be 108.107. Don't let the decimal confuse you. It's simple math. Don't overthink it. Just keep it simple. Everything that you do, just keep it simple. All right. So if you buy, you're expecting the market to go up. You're expecting the market to go up, so you want to add 10 pips to your take profit. Again, in the example with your entry point, 80 plus 10 is 90, and you just put everything, drop everything else back down. Disregard the last number. 80 plus 10 is 90. That would be a take profit. Because you bought, you're expecting the market to go up, and so you want to put your stop loss below. So you want to subtract from your entry price the 15 to 30 pips. And as you get in the academy and you learn more, then you can kind of dictate where you want to put your stop loss. Whether it be 50 pips, whether it be 30 pips, whether it be 50 pips. That's 100% up to you. You control your trading account. So in this example, we did 30 pips. We subtracted 30 because we bought. So 80 minus 30 is 50. And so that's how we get our calculation down here. I know I probably lost some new people, but if you have a question, feel free to hit me. Feel free to reach out, and we can go over it again. We can probably do 1 or 2 examples so that you can see it in action. But that's depending on if you have a question. So when you buy your entry price, you get your entry price, you want to put your take profit higher, so you want to add for your take profit and subtract for your stop loss, because the numbers, the exchange rates that are on this side of the chart will be increasing, that's why you're adding, and it'll be decreasing, that's why you want to subtract for the stop loss. Sell, same thing, your take profit, you want to put it below because sell is down, and the take profit, you want to add to it because it's above. So this trading screen now, the trading screen, this is how it would look when you go to open a new position. You go to open up a new position. The first time that you come on, it'll look like this. It'll probably say 1.00. You will change your lot size to what's best for your account using proper risk management. I normally use a calculator that I would share if you guys are interested in it. But when you get on this screen here, once you selected your pair, it's just a matter of hitting buy or sell so that you can get an entry price. Once you hit, in this example, we did sell. So once you get on the screen, just hit sell. It'll take you to this screen automatically. Your entry price will always be under the currency pair's name. GBP, JPY, this is your entry price. This number that the arrow is pointing to is where the current price is. And so this will constantly be moving. As the market moves, this will move too. So this is what you want to use to do your calculation on. All your calculations come from your entry price. And so we sold, so we can disregard the last number. 75 minus 10 is 65, so we just drop everything back. We would hold down this area where the open trade is, and then hit modify, and then you just put in your calculation 128.657. You did the 10 pips, right? Hit modify, put in your take profit, hit modify. If it is great, if it still shows great, that means you're doing something wrong. You may have added for your take profit but not highlight. That's how you know that you did something wrong. Probably just need to take a look at your calculation and try to do it over. Just start over, do your calculation over, and try it again. Make sure you're putting it in the right slot. Don't put the take profit in the stop loss slot. It won't let you modify it. All right. On the Android screen, this is how it looked before you enter a trade. We did sell again. So we would just hit sell by market. I'll take you to the screen here. This is your entry price. Hold down the area of the open trade. And it'll take you to the screen here. The red is the stop loss. Red is negative. So you want to put your stop loss in. Your stop loss hit, it'll automatically kick you out with a loss. Take profit, it'll take you out in profit, automatically kick you out the trade. So when you look at this example, 128.716, we sold, disregard the last number. So we got 71 minus 10 is 61. So 128.616 is our take profit. Hold this down, modify. Once this highlights, then you can just click modify. And that is all I have for entering a trade. I want to see how much time has gone so far. Okay, we still good. So I want to share one more, just little tips and tricks that you guys can use that will probably be beneficial to you, and I hope that it'll make your trading journey a little bit easier. That way you have clear direction as to what you want to do, or what you need to be doing, what you need to focus on, so that you can sharpen your skill as a trader. This 4 slides is going to be very quick. So definitely I want you guys to demo first so you can get a feel for it. Whatever mistakes you need to make it on demo account where you have $0 at risk. Demo trade before you trade live. That's the best advice I can give to anybody. When you're just getting started, whether you've been trading for a little while, if you've been having a bad streak, you can always go back to the demo and put that money at risk, because that's fake money. If you ain't losing $1 by demo trading, don't worry about missing trades. That's okay, because when you demo, you get more experience in the market, so that you could be a more successful trader. All right. So questions to ask yourself before you trade live: are you a market specialist or a trade specialist? Basically, know how you want to trade. Know if you a swing trader, a scalper, intraday. Know what it is that you're actually looking for, and you're not just looking for opportunities just to trade because you want to trade all the time. Like, have a clear plan as to what you want to do, and that would kind of make it a little bit easier for you to say, okay, I only trade 2 hours out of the day. I'm only going to look for setups 2 hours out of the day because of my busy schedule. Then you know what you need to be doing. Don't be trying to trade for 8 hours if you know you only have 2 hours to really focus in on it, right? What trading sessions do you trade? There's 4 main sessions. We have the Tokyo session, the London session, New York session, and Sydney session, right? Identify when those sessions are through going through the academy, and you watching different educators and or trainers. Then you're gonna be able to identify what style best suits your life and what you can capitalize more out of, right? And so when you understand what type of trader you want to be, which trading sessions you want to trade, which time frames you will trade. What do you look for? What are your confirmation? How do you plan on exiting trade? Managing your trade is very important as well. Like for me, I'm a swing trader, so I set my trade in the night. I wake up, check it, and just managing my trade now because I probably already in profit. It's just a matter if I'm going to close, if I'm going to take a partial profit, am I going to move my stop loss into profit? And those are the kind of things that you need to have a clear direction as to what you want to do um, to make sure you secure in the bag. That the goal is to secure the bag no matter what. So you need to figure out how you plan on exiting trades, whether you're gonna take the partial or stop loss and profit or just manually close the trade. What's your maximum risk per trade? How much you prepared to lose if this trade go against you? Once you know that, once you know what you're putting on the table that you could potentially lose, when it happens, you have a different approach to losing trades. If you know that you hop in the trade, you just got started, first trade, you know that you put your stop loss to lose $3, 3% of your account balance, right? And you lose $3 or you lose $2, you won't feel no way about it. But let you not use the stop loss and then you lose $30, $40, you're gonna be upset. You are going to be upset and that may cause you to miss some more opportunities to capitalize in the market where had you used proper risk management, then you wouldn't even been worrying about that $3, that's 3% of my account, still got 97% left. I Gucci, I good. I don't need to stress about that. I have more time on the chart now because I'm not upset, I'm not beating up myself that I over leveraged or didn't use the stop loss. Once you have that clear plan, it's easier to do it. Um, Another question that you have to ask yourself before trading live, because this will mess with your mental. I will not play with you. I will not joke around with that. It will play around with your mental if you don't have a clear plan as to what you want to do. So what will you do to ensure you are physically fit to trade? For me, it was not too much time on the computer. I everything once I got started and I understood that I was actually learning about this market and I was actually taking in the information to where I understand it and could explain it to people, I had to take myself and remove myself from the computer because I was at the screen all day, right? Um, and then what will you do to ensure that you are psychologically fit to trade? Trading is mental, and if like I was explaining with the stop loss, if you don't plan for that and it happens, you lose a huge chunk of your balance, it's gonna affect your mind. It will. Like it will. It will. So 6 steps to becoming an expert. This is more so for me and my swing trading strategy, but it still could apply to whatever system that you're using, whichever strategy you're using. I have it as get comfortable in the zone. So I trade from zone to zone. So for me, it's quickly learn to quickly identify zones on any chart. And once you got that down pat for the swing trade, and that everything else comes naturally. So if it's you trading the cloud, make sure you understand what it is that you're looking for on the cloud, using the Bollinger Band, same thing. Understand what it is that you're looking for. Decide on what your confirmation is going to be. What are you waiting on to say, okay, hit buy or sell now? Again, step 3 is back test. That is for my swing trading as well. You back test some trades so you get comfortable, you know what you're looking for. Again, if you're using a different strategy, then it would be go back in the past to look for that setup, that confirmation. Forward test, open up a demo account and risk 2% or less per trade, and then triple your demo account. And that would give you more experience in the market where you don't have any money at risk. Um, and then you turn a small trade into like triple a small account. So for me, it was $25. Just triple it, turn it to 75. It took some time because I'm using proper risk management and I only risking 2%. Risking 2% of my account balance per trade, so that took a while. But by the time I finished back testing a bunch of trades, tripling my demo account, and then tripling my small account, it was just time to go collect this money now. And I I was at peace because I didn't have to worry about me losing money while I was testing out my strategy that I use today. And then step six is trade a live account. Uh, and risking 2%, just stick to the rules of your system. Whatever your confirmation is, wait on that. If you say you're not going to trade during news, then don't trade during news. Just stick to the rules that you set for yourself or the educator that you're following. And uh, basically, that's it. So to recap, trading is mental. If you go ahead and triple your demo account, you backtest a lot of trades, you see that it's successful, you triple your demo account and then you triple a small account, you will have confidence out of this world that you don't have to worry about nothing. Find a strategy, whatever works best for you. I say swing trading for me. That may not apply for you. You may be where you love scalping. Scalping is easier for you because you don't have the time to put in to to do the scalp, I mean the swing trading or the intradays. Like scalping, you might want to watch your trades, and that's fine. Like whatever, to each its own. Whatever works for you, that's fine. Back test your strategy, demo your strategy, become an expert. Doing all those things again are gonna help you, and then build a small account, go live, and then let's make this money. All right. So if there aren't any